Jared Bernstein, the chair of the White House Council of Economic Advisors. Jared, let's get to the fiscal side in a second, but we were kind of trading notes here before we came on air about what we heard in the room last night. And this issue of the sacrifice ratio, which is how it is that we brought down inflation by 5 percentage points, at least on the headline, not so much on the service side.
I'd say 6, but go ahead on the CPI.
We can come back to your numbers on that, 9 to 3. Okay, fair enough. But we haven't had an increase in the unemployment.
Right.
And in the way that economists worry about things, that's a problem.
Well, is that a good problem to have?
Explain why that's a problem, though.
Well, obviously, from Joe Biden's perspective, that's anything but a problem. Right. It's something that he's, of course, been striving for, which is to maintain the tight labor market while making real progress against inflation. And as you've said, that's been happening, and we call that a very low sacrifice ratio, meaning that you haven't had to give up unemployment points to get less inflation. So look. The economic model, the Phillips curve or sacrifice ratio model, is very much based on the demand side of the economy. And I don't think this is that big a head scratcher. I wouldn't call this disinflation immaculate, as some have, because what we're seeing is a renormalization of the supply side of the economy. And that renormalization it has its fingerprints all over the disinflation we've seen thus far. Now, there's a good question as to what's around the corner and the last mile.
Well, that's the question. Is that, okay, did we get out of this without having to sacrifice anything, or is that sacrifice yet to come?
That is unknowable, but I would say that that's the question bubble that's hanging over this lodge. I probably had a dozen conversations, and that was a question that came up in almost every one of them. I can tell you that from the White House perspective, we're doing all we can to, what I said a minute ago, maintain the gains that we've had while continuing to make progress against inflation. And look, you mentioned fiscal. I mean, many of our policies are geared towards kind of coming up and making sure that we have enough economic activity in this economy going forward as the fiscal stimulus from the pandemic era responses fades. And so that would be IRA,
I'm cutting you off here.
Chips.
All right, I'm cutting you off here. I get all that, but tell that idea that you guys are being fiscally responsible to the bond market, which freaked out in the last month because of all this issuance coming down and no sense at all of any fiscal prudence.
I think in a way that conflates two things. One is the very near-term question, which is how do we get inflation back to where we need it to be? Our work is not done without sacrificing demand on that side of the equation, while over the longer term plotting a path toward deficit reduction and fiscal consolidation. So the latter is what you're asking about. And that really gets to our budget, where we have $2.5 trillion in deficit reduction, and that's on top of the trillion in deficit reduction that came out of the debt ceiling agreement, which was an overwhelmingly bipartisan agreement. So that was a good ending to a very tough story. But in the near term, what I'm saying is that as the labor market stays tight, as the spending on the infrastructure, on the Inflation Reduction Act comes into place, particularly in the manufacturing sector, standing up domestic semiconductors, domestic clean energy production, that's helping to sustain demand going forward. And over the longer term, our fiscal consolidation comes out of our budget, which of course means very serious political work to get that over the legislative line.
Doesn't your deficit reduction include higher taxes that aren't going to be enacted by Congress?
Look, that is a prediction that, probably a lot of people would make. I would say that many people, I don't know about you, but many people, including in conversations I've had here, many people thought Joe Biden wasn't going to be able to legislate half of the stuff that he's already been able to get over the goal line. So I would never count him out when it comes to pulling legislative rabbits out of hats. But yes, he is very much invested in a fairer tax code, and part of that means higher taxes above $400,000.
So let me just be, I don't know, like a household person here, like a regular person, which is if you're planning on spending X and getting Y revenue, and you're not going to get Y revenue, does that mean you're not going to spend X? I mean, are you going to keep spending even if you don't get the revenue to back it up?
Well, look, that is an important question, and I think exactly the right question for this dynamic, because one of those sides has to give. In our budget, we do both. We cut spending, actually, that's been kind of overlooked, but particularly on healthcare, where I think there's kind of some low-hanging fruit. And by the way, some of that is already in the system. The Inflation Reduction Act cuts spending, particularly through giving Medicare care something it's long needed, and Biden, again, managed to legislate, which is the ability to negotiate for lower drug prices. That's huge. It's a huge pressure point in the budget. And then, yes, fairness in the tax code. But look, I don't want to lose the thread here, which is that we are in this remarkable economic moment where we've had so much inflation, so much disinflation while maintaining an extremely tight labor market. Again, I think that's what we're going to hear about today.
Jared, I see this. I hear you on. There's certain remarkable things about the moment. But when we look at the polls of how people feel about the economy, they feel fairly lousy about the economy. And that's because price levels are up and not going back down. How do you address that? How do you make people feel that the economy is better when, in fact, in many cases, their wages are not equal to the rise in prices?
Well, on the last part, I'd probably hit you with a little bit of a fact check, which is that real wages have been going up
several months.
Last several
I would
months.
not
I think
disagree.
And I think that's really important.
Okay.
Look, it is a fundamental question, and I think a pretty straightforward answer is that we've got to keep pushing against inflation. Okay. So there's disinflation and deflation. We've had very significant disinflation, going from a bit north of 9% on the CPI to 3.2 when last seen. But that just means prices are rising more slowly. People want to see some deflation, and we've seen some deflation. So we have to keep working on that. At the same time, with real wages growing, that's going to make a positive difference in people's attitudes going forward. That's my hypothesis.